What is going on, everybody? In today's video, we're going to talk about the importance of higher time frame analysis and why you need to stop using lower time frames when it comes to taking your trades, plotting entries and exits, etc. And this is something I wish that I knew when I started my trading journey 2 years ago. And I heard about this nonstop from people who were further down the line than me, but never knew how to apply it or why or understood its significance until now. And that's something that I want to portray in a very simple manner in this video because I think it will provide a lot of clarity for you, as it definitely helped me as well. And as you've seen in my videos in the past, I always have the higher time frames pulled up on the left side of my screen with a lower time frame in the center of my screen that I'll take my trades off of 9 times out of 10. And I'm actually starting to move fully away from the 1 minute chart and sticking with the 2 and 3 minute, 5 minute, and using the higher time frames from there for a bigger analysis. But let's jump into this video on how we're going to look at the higher time frame to base some of our entries and exits off of. Now, mind you, using the daily chart, which is what I have pulled up here on the NASDAQ, and we're going to use the NASDAQ for today's video just to plot some visual examples. And yes, I understand that this is in hindsight. It's very easy to see these things in hindsight rather than in real time. I get that, but this is just for visualization's sake and how this helps me. So this is the daily chart. Very difficult to plot out a majority of these moves on the daily chart because you have 6 to 8 hours plus of price action to ultimately see where the market's going to go, right? So let's just use this entire move right here, for example. You can plot this out and say that you have a bullish move to the upside just to get sold off after this red hammer and then break through this trend line and boom, you're good to go. So in theory, you could have started the trend line here, had some sort of a plot going up, but mind you, if you had it look like this, you were just going to get smoked anyways. But you can tell that we came up to test the top and we pushed down. Or if you wanted to wait until this red candle closed, it would be more of the same. And you can duplicate that just below here as well. And then we actually broke below the bottom of the VWAP. And then as we saw this price action come up, it sold off that same day, vice versa, and it just keeps going. And you can do the same across lower time frames as well. And I'm not going to beat a dead horse here in terms of seeing things break out or break down, but you have another in this general area here. And this is why you can say that these are just lines on a screen and none of it matters, right? And that is true. But if it gives you a visualization of how to see the market going forward, it definitely helps to a certain degree. This is not something that should be relied on wholeheartedly, but it definitely can help you in the greater scheme of things. So let's apply this in a more realistic sense to most recent price action. Let's go to the 15-minute, look at the most recent price action on the day, and see how things looked. So you had massive selling pressure here. Okay, that's fine. But as we're going through the day, you have your high, and you can draw this down here. And again, yes, hindsight, 2020, totally cool, totally get it. But you have this triangle, this wedge, whatever you want to call it. And as you look, okay, we have a 15-minute close above, and then the 15-minute came back down, tested the top of this wedge or triangle, whatever you want to call it, and then it immediately pushed itself back up. Then this 15-minute candle came back down, virtually tested the top of this wick after the gap, and then pushed itself back up. Well, then there you go with a solid entry or an exit plan that you could have taken for the trade. So as this started to break out, you could have said, all right, well, I'm going to draw a horizontal line here, which is where my stop is going to be, just below this candle here. Let's put a little ellipses on this as well, just as what a potential trade plan would look like. So your stop is going to go just below that line, and let's say your entry is somewhere on the breakout, maybe above this candle. Let's go to a 5-minute chart. You can see how this takes form and takes shape a little easier, pun intended, right? Comes down, price then breaks above out of the triangle. You have this red candle that comes down and immediately tests within this range and gets bought back up. And then boom, you're good to go. So let's say you took an entry right here on the breakout of this candle at 125 and your stop was maybe a few points below that. Okay, Well, as long as your stop doesn't get hit below this candle, you had a solid trade up. And again, easier said than done, but this was a solid way in which you could have taken a trade. So let's go to a 2 minute. What do we see? Comes up, you have somewhat of a double bottom in this general area, and then it closed. This candle opened and closed right outside of this wedge, came back down, test the top of it, and off you go to the races. Easier said than done, but again, this is providing the visual as to why higher time frame analysis and higher time frame entries and exits will cut the noise. And mind you, if we go to the 1 minute chart, it's going to look pretty similar. But the point is, and this week, this past month, essentially, the entire beginning of December has been brutal in terms of price action. This right here, I'm just going to remove these shapes. This right here has been enough to make you rip your head out. You're getting stopped out. You're getting entries and exits. You're over trading and you're just getting blasted. And that's been the overall theme of this market. And even though we're in a downtrend, there was no real clean move of the downtrend until you got to about here or here, where this just rises up and immediately gets sold off. But very difficult. Same here in the afternoon session, which is why, although the afternoon session has brought us really good price action, or at least really good moves, this is awful. You're getting chopped around. And with the market making all time highs, psychologically, you're going to think the market is going to keep going higher, which it looks like it's going to keep doing, but easier said than done, very difficult to see in real time until you can cut out the noise with what is the 5 minute chart. And even then, these wicks are pretty crazy to see. But until you start to throw those lines down on your chart that don't really mean much, you can start to paint a little bit of a bigger picture or a better picture as to where price action may or may not go. And if we go back on the previous day, you can look for something similar to give you a different thesis, right? Let's say this is the same thing here. We have a little bit of descending price action. We're looking at the bottoms of this candle came out, never really got a retest of the top, but it's just the point. We came up, boom, sold off, up. So we had to push up, consolidation above VWAP, push up. This is why using VWAP is also something very, very important. But let's say you're looking at this right here. This price action is awful. But again, you need to be more patient with your trades in this market. It's definitely different than the fourth quarter of last year, where entries and exits made a hell of a lot more sense to me in terms of being able to find good trades. And then even on a trend day like this, man, it's just, this is brutal if you're trying to find the top and you're ultimately not even going to find the top in a market like this. You had an insane bull run. But that's what I really wanted to show you guys for today's video, is that higher time frame analysis will help you cut through the noise with being able to find good entries and exits, but also see through the price action that's been absolutely atrocious. So if this was helpful to you guys, please comment down below, shoot a like and a thumbs up, subscribe, just support the channel in whatever way you can. I'm not trying to build a channel where all it is affiliate links and just nonsense and pushing products that I don't even use or care to use. I want to be known as a good trader, not a great marketer, and that's ultimately what half, if not three-quarters of these trading influencers are, is that they're just marketers. They're not trading, and if they are, they're trading demo accounts or whatever the case is. So working towards those payouts, working towards being a better trader, so I'd appreciate your guys' support. But nonetheless, thank you for watching, and I'll see you in the next video.